All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. So in today's video, I want to run through my UK ISA portfolio. And I'm really happy now we're seeing income shares products actually doing what they're supposed to do. And I think we're really going to see this portfolio enhance moving forward, as the plan is to hit so much income, and then I'm also going to match that with growth. So we're using the income plus growth strategy, a hybrid strategy moving forward. And also I've got my US portfolio for income as well. So all that being combined is going to be absolutely amazing in my opinion, but we'll see what happens in the future, and I'm sure the results will say that. So let's get right into it. So this is the UK ISA portfolio. I have now hit over £50,000, which is a big milestone for me. The next milestone will be to hit 100k. Now I want to do this for Christmas. Whether that happens or not is a different story. I really hope it does, but we have got some pushing to do for that to happen. So right now the full value is £50,089.49. The total profit is £6,294.43, and that is up 10.2%. We was actually up 11%, so we've actually had a bit of downside. The markets went down on Friday. You need to always zoom out, because if you watch my US portfolio, the reason why I've waited till Tuesday the 14th to record these videos is because the US portfolio is actually at all-time highs than what it was before the drop. So it was at 4%, but I'm not going to dig too much into it actually. So we'll just leave it at that. Go and watch the US portfolio, and it's actually a really good reason to zoom out, because it's only been a couple of days since that market drop and that portfolio is back booming. It's always a good reason to zoom out. So the yield right now is 42.18%. The annual is now 21,000. I have added a bit of money into this. We've had dividends received, and that has been snowballed back into a new asset. And that is one of the things that I really want to focus on now, is getting to the target allocations and getting rid of Coinbase ETP down to 5%, because that is over allocated, and then really hitting all my allocations from the portfolio now. And then once that happens, we're going to really start seeing this snowball. And I really want to see the growth in this portfolio take over as well, because I do want a massive allocation in growth now. And I think that is the strategy that I'm going to be using, because once I get to 4-5k dividend income between all of my portfolios, I'm going to be at that sweet spot where I think this is probably about right. It's time to double down on growth, and I think I'm going to be at a really sweet spot when that happens. So let's jump into the income assets first. The annual is £21,099.09. The yield is 42.18%. So first up, we have gold ETP. We have 10.24 shares. We are up 23.88% on this position. Capital gain at £9.78. Realised P&L at £39.81, and dividends received £44.46. 0.23% allocation. This is one that I'm not adding to right now. Probably going to add to silver next. As soon as I sell Coinbase, I think I'm going to put some money into silver ETP. 5% allocation coming for gold. Silver ETP, we have 5 shares, currently up 14.12%. It's done really good. Capital gain of £24.01, and dividends received £1.19. Just look at that, we've got 5 shares and we're up £24 on share price. Amazing. 0.4% allocation, and looking for a 5% allocation. I really think gold and silver ETPs are going to do great long term. They're really that slow burn in your portfolio that even when things are maybe not going the way they should, they're still going to do the thing long term. Next up, we have Main Street Capital, and we've got 79 shares, and this has took a plummet as of late. And I think we are going to see this with all BDCs moving forward now, and it'll be really interesting to see how Main recovers from this, because long term, Main is by far the best BDC on the market. No doubt about that. The best BDC on the market. But for that reason, it is always at a premium. And that is something you have to really think about, because it is priced high for a reason, because it's a quality BDC. And if it will just have a look at just price action for now. So it's down 8% on the 7 day. The 1 month were down 15%. The 3 month were down 11%. But if we see we're up on the 6 months, so when the Fed cut, this really did affect Main Street Capital. And I think that's what we're going to see with BDCs moving forward. As rates drop, then BDCs are going to get hit. But you have to take into account, is this going to be the perfect time to buy Main Street Capital under $50, under $40 if it goes that way? Let's zoom out like I've just been talking about. Do you think this were a bad buy on this dip? On this dip? No, it was a great buy. I did the same. I was buying it, I think I bought it around 23, 24 around here. And I think I made about 40% on it. And then I did sell it. But yeah, it just goes to show you really need to zoom out sometimes and think, have the fundamentals of the business actually changed? And if that's a no, then it's probably going to be a good buy if you believe in that product long term. So we have 79 shares of Main Street Capital, currently up 7.32%, even though we've had a huge drop in the share price. We have a capital loss of £302.36, a realised P&L of £785.05, and dividends received of £286.89. Taxes paid £32.86, fees paid £23.85. Currently have a 6.74 allocation, looking for a 5%, so I am already over allocated. But if this goes between $40 and $50, I'm probably going to be loading the bag up. I think that's a really good price for Main Street Capital, between $40 and $50. I will definitely be loading my bags up if that's the case. So next up we have Broadcom ETP. We are up 7.25%. I didn't buy this one that long ago, and we're doing great since. 64 shares. We've got a capital gain at £105.98 and dividends received £60.77. We are just at the allocation. I'm probably going to buy a couple of more shares today just to get that to 5%. So that's going to be great. So we've got there now with Broadcom. Absolutely amazing. Next up we have FEPG, which is the Rex Tech Innovation Premium Income, which is the same as FEPI, but in pounds. 250 shares. Currently we're up 4.71%. Capital gain at £118.92 and dividends received £109.33. Nearly got a 10% allocation. I have put 20 on here, but that's just because we don't have enough funds out for what I like in my portfolio. So I have put a couple of the big baskets to 20% just until we've got some more funds coming out back into this year. I think we should be looking at around 4 new funds. What's coming yet? I don't know, but as soon as they get released, I will let you know exactly what is coming. But very interestingly, when they do come, I think this portfolio is also going to have exactly what we need. And also, Octay, as I just said, a new batch coming soon. He wanted ideas on Twitter, so please guys drop your thoughts in Twitter onto what you want. It really does help to push the products that we really want. Me personally, I want a fund of funds. And I want anything crypto related, even though I don't think anything crypto related is possible yet in an income product, is what I've heard so far. So yeah, make sure you drop your thoughts on Twitter, X. It really does help us get the products that we want.
In the past, I've had quite a lot of questions asking how I actually keep track of all my payouts, my dividends, and my portfolio snowballing each month. I use Snowball Analytics. It pulls everything into one dashboard so I can instantly see my cash flow strategy is really working. If you want to try this for yourself, I've got 10% off for you. Just use my code CashflowKing below. Links in the description. All right, let's jump back into the portfolio review.
So FEPG, we're up 4.71%. 10% allocation, looking for 20% up to now. Next up we have YMAP, and we've got 300 shares of YMAP. This is the Yomax Big Tech Options Income ETF. We're up 3% right now. Capital gain at £135.02, a realised P&L a minus £58.31, and dividends received £552.74. 25% allocation right now. looking for 20%. So I'm not actually putting the dividend back in this right now. I am putting it into some other stuff just to get the target allocations to where I want them to be. And then once they're exactly where I need them all to be, what I will do then is put the dividend back into each fund. Next up, we have the Mag 7 options ETP by income shares, Mag D. We currently have 74 shares. This is up 2.02%, a capital loss of £19.89 and dividends received £69.81. This is another recent buy. So we've only been paid one dividend so far. Currently got 4.88% allocation. I have set this to 15% just to see exactly how it's playing out, because the US version by Roundhill or Yield Marks do very well with the Mag 7 baskets. So yeah, that's why I've set this to this, and I think this one's going to be great long term. So once that I see some performance on it, I'm going to start moving the allocation up. Next up, we have Smith. We have 100 shares of Smith. This is a 24 select monthly income fund, and I really like this fund because it hardly moves. It moves upwards very slightly, and you get paid a 7-8% dividend monthly, which is great. 0.18% allocation so far. It's up 1.42%. It's got a capital gain of £1 and dividends received of 25p. Looking to get a 5% allocation. So next up is the most recent buy, Palantir ETP by income shares. Last week I bought 41 shares because we had a drop in Palantir underlying, and I thought it was a good opportunity to buy it. So I bought some shares of Palantir ETP. So we've got 41 shares, currently down minus 1.79%. That is a capital loss of £22.78. But bear in mind, we've had the dividend ex-date drop, and also the underlying of Palantir has gone down. So I did expect this drop in case Palantir went down a little bit more, and it did after I bought. 2.5% allocation right now, looking to get this to a 5%. No dividends paid as it's a new buy. We currently have £65.89 in cash in the portfolio. So next up, down to the older stuff that we've got. Tesla ETP, this is still the dividend ex-date drop, and also we had a drop in the underlying, so this is why this is down. Tesla ETP, we have 786 shares. Currently got a 7.11% allocation. I am looking to just keep this to around 5%. Currently down minus 6.45%. That is a capital loss of £955 and 4p, a realised P&L of minus £5,540.84. Dividends received £5,086 and 19p. So hopefully in the coming months before Christmas, we're going to see this one positive again. But with income shares' new strategy, I'm very hopeful that this is going to be working great. And also, if you've been keeping up to date with the videos that I've been doing, you'll understand exactly why I'm bullish on income shares' new strategy. So next up, we have Coinbase ETP. So in case you missed a couple of portfolio reviews, the reason this is over allocated, I will dig a little deeper into the story. So I had 25% allocation in Tesla ETP. I got this green, it was at plus 7-8%. So what I did, when this were green, I sell out of this to 7%. And then I put the money into Coinbase ETP because both of those ETPs were minus 25% on total return because of how the old strategy went, and the old strategy was not working correctly. Since then, income shares have changed the strategy and all looking well. So if you've missed some videos, make sure you have a look on my channel, look on how things are going with the new strategy. It will surprise you quite a lot. So now I'm just waiting for Coinbase to go up. Now we've lowered our cost basis on Coinbase again. And then once this gets positive, I will then sell Coinbase down to 5%, which is the target allocation. So currently we have 3,464 shares. We are down minus 9.61%. That is a capital loss at £8,262.73. A realised P&L a minus £617.43, and dividends received are £6,559.43. The current allocation is 21.46%. I said when this does go green, because I think Q4 is going to be very good for anything Bitcoin related or crypto related. I think this is going to go green, and then I'm going to sell it. I was right with Tesla, and hopefully I'm going to be right with Coinbase ETP. Otherwise, I'm going to be holding this allocation for quite a long time, if not until Bitcoin and Coinbase does go up. So next up, we have MSTP, which is Han ETFs, MISTI, ETC. Currently got 367 shares, 10.9% allocation. Currently, I want this to get this down to 5%. Again, this is one of those where MicroStrategy having a really bad time at the moment, gone down quite a lot. When Bitcoin does go up, this is going to do great and hopefully go back up to positive levels. But if this goes green, I'll definitely be selling down to 5% and then putting the money into other products. Now we know income shares strategy is working. We've got more products to play with, and that is amazing. So this is the trouble we had. We didn't really have enough products, and income shares strategy didn't work. And then now we're just waiting for good products to come. But as we can see, we've got positivity in the portfolio now. These are doing great, and other assets are going to be doing great as well. So we can really start moving forward with the portfolio, and you'll start seeing the total profit going up, I think, as the markets go up now, which is great. So let's a quick look in the test subjects. I did put the JP Morgans in here because I'm not really doing anything with them. I've just bought a couple of shares of each to monitor the situation because they are in the ultimate income pie. So we have JEPQ and JEPG, and then I've got PMLP, which is the energy ETF, which is a quarterly payout and pays around a 4 to 5% dividend yield. So I'm just leaving these in here, seeing how they go in. We'll monitor the situation, see exactly if they can be added to the portfolio. Right now, I'm not liking the data on any JP apart from JEPQ. That one seems to be doing all right, but when you've got other options out there, like REC shares and YMAP, for example, I think I'd rather go with them than the JEPQs. And let's just have a look at the data, and I'll show you my reasoning for that. We'll just look at YMAP versus JEPQ then. And as we can see, so far, since these funds have been out in March, YMAP has doubled the return nearly of JEPQ. Now let's just have a look at price performance. So if we look at YMAP, let's just do the 6 month, is up 16%. And if we look at JEPQ, it's up 13%. So right now, this is why I'm saying JEPQ is probably the only JP Morgan that I like right now. I don't think JEP is doing very well, or JEGP. So like I said, I'll keep it in my basket. We'll keep monitoring. I would like them to perform good, and I would like them to also go inside my portfolio. Next up, we'll get into the growth side of things. Just bear in mind, we did have that massive drop on Friday. It is now Tuesday the 14th. So we have ideally got a bit past that, but yeah, we've got some assets that are doing good. We did have a good day on Monday, and it did bring the profit back up. Some assets went back up. So I think Broadcom went up another 10% again, which is great. And I've got some really good things in this portfolio that's done great. So we'll start with Archer first. So that's up 40.13%. Capital gain of £17.56 and fees paid of 6 pence. Just bear in mind, we've only got invested amount of £43.61 and we've got a capital gain of £17.56. So that is rather crazy. This one has been done amazing lately. Currently got a 2.43% allocation. Broadcom, this one went up again yesterday of 9.9%. Broadcom shares are trading higher after the company and OpenAI announced collaboration to deploy 10 gigawatts of OpenAI designed for AI accelerators. So they went up 10% on that news, which is absolutely great. Currently up 22.97%. Capital gain of £19.01. Realised P&L £875.68. Dividends received of £5.88. Taxes paid 88 pence and fees paid £12.37. Currently got a 10.19% allocation. Next up we have TSM, and it's Taiwan Semiconductor, 0.58 shares. Currently up 17.96%. Capital gain of £20.24. Dividends received 15 pence, taxes paid 3 pence, and fees paid 16 pence. 5.28% allocation. Next up we have Coinbase, which is 0.19 Shares currently up 13.14%. Capital gain of £6.24. Fees paid 6 pence. We have a 2.12% allocation. Eli Lilly, zero point 0.3 shares, currently up 11.82%. Capital gain of £20.27 and fees paid 25 pence. 7.454%. One thing I do want to mention, guys, if you are on 212, I have all this in a pie on 212, which you can take a look at. And also, I do weekly updates, and sometimes I'll update daily if there's been some big changes within the certain pies. So yeah, get me out on the Trading 212 socials, keep up to date with all the updates. Next up we have Snowflake, 0.343 shares, 9.95% total return so far. Capital gain of £7.39 and fees paid 11 pence. Currently got a 3.2% allocation. Next up we have United Health, 0.18 shares, currently up 7.86%. That is a capital gain of £3.96, realised P&L of 3 pence and dividends received 11 pence. Taxes paid 1 pence and fees paid 8 pence. Currently got a 2% allocation. Hims and Hers Health, 1.72 shares. We are currently up 6.88%. Capital gain of £4.29, a realised P&L at 88 pence and fees paid 13 pence. 2.83% allocation. Next up we have Palantir, got 0.9 shares, 5.78% on total return. Capital gain of £6.74 and fees paid 17 pence. 4.8% allocation. Currently I have AVGI. This is not in the growth pie, but it is in the ultimate income pie. Got 1.34 shares. But this is a growthy asset. This is why I put it in here. 5.65% on total return. Capital gain of 7 pence. Realised P&L of £339.98. And dividends received are £75.25. And fees paid £39.45. So them fees paid is because this actually gets stamp duty, which is a bit of an issue. But long term, this fund's done like 300% over the course of 10 years, so all good. Next up we have Tesla, got 0.6 shares, so 3.98% on total return. We've currently got a capital gain of £21.14, a realised P&L of 45 pence and fees paid £1.06. Currently got a 7.87% allocation. Very bullish on Tesla long term. Now Elon Musk is back in the driving seat. Meta, we have 0.3 shares. It's currently up 3.48%. I think currently Meta's been having a bit of a bad time. I think it's gone down quite a lot. Yeah, and the 1 month we're down nearly 6%. But it's just a little dip. I think long term we're going to see some price appreciation again. Like if we zoom out a little bit on the 6 month, we're still up 35%. On the 1 year, we're still up 21%. So yeah, we've took a little dip, but I think we're going to go back up, hopefully. 3.48% total return, a capital loss of £7.92, a realised P&L at £154.23. Dividends received are 4 pence, taxes paid are 1 pence and fees paid £11.57. Currently got a 6.43% allocation. Next up we have Nvidia, which is one of the biggest holdings in the growth portfolio. 1.82 shares. We're currently up 3%. We've got a capital gain of £23.14, a realised P&L of minus £7.46 and fees paid 95 pence. Current allocation is 10.28%. Next up we have Google, which is 0.77 shares. We're currently up 1.97%. Capital gain of £2.96. Dividends received of 1 pence and fees paid 21 pence. Currently got a 5.68% allocation. Next up we have Microsoft, 0.51 shares. We are up 1.72%, and that's a capital gain of £5.61, a realised P&L of £1.89 and dividends received 4 pence. Fees paid 81 pence. 7.9% allocation. Next we have Amazon, which is 0.88 shares. We're up 1.64%. Capital loss of £2.92, a realised P&L at £8.24 and fees paid are 53 pence. The allocation right now is 5.81%. Netflix, we have 0.08 shares, And this is one that has gone up recently. When everything went down, Netflix was one of the only things that went up. So we are up 1.44%, capital gain of £1.14, realised P&L of 12 pence, and fees paid 14 pence. Currently have a 3% allocation. Next up we have Shopify, which is, we've got 0.85 shares. We're currently up 0.82%. Capital gain of £4.59, a realised P&L a £1.86, and fees paid 56 pence. That's a 3.95% allocation. Next up we have MasterCard, 0.17 shares. So this is 0.81%. Capital loss of £2.9, realised P&L of £43.60. Dividends received of £4.87, taxes paid 73 pence, and fees paid £12.25. Currently got a 2.86% allocation. Next up we have Uber, which is the only red in the portfolio is Uber and Spotify right now, which is absolutely great to look at. So Uber, we are down minus 2.13%. We have 1.32 shares and a capital loss of £1.98, fees paid 14 pence. 3.73% allocation. And last but not least, we have Spotify, which is minus 2.29%. Capital loss of £1.9, realised P&L of 3 pence, and fees paid 6 pence, 1.85% allocation. So that is the growth portfolio done. We will jump into some news in a moment to see exactly what's going up and what's not. But one thing I do want to say, what I will do with this portfolio moving forward is move the allocations up to things that are actually doing good. So I'll most likely move the allocations up towards Archer, for example, or maybe TSM over the next couple of weeks, and then bring some allocations down on things that aren't working so good. So all looking great so far. Really happy with all the assets inside my portfolio right now. Amazing. So one thing I do want to mention is my growth portfolio. That is 90% of the growth portfolio. Then I have 10% in crypto related companies. So this is the crypto growth portfolio, which is 10% of the full growth portfolio. So we have Bitmine, which is ETH, and then we have MicroStrategy, which is BTC. So Bitmine, 3.66 shares. We are up 3.53%. Capital gain of £5.57, fees paid 24 pence. Then MicroStrategy, 0.6 shares, minus 5.05%. Capital loss, £7.40, and fees paid 23 pence. So this portfolio is 50% Bitmine, 50% MSTR. And that is the way it will stay, with it being 10% of the full growth portfolio. So let's have a look what's going up as of late. MSTR is up 3.5% due to Bitcoin. Nvidia is up 2.88% due to semiconductor companies trading higher. Bitmine is up as well, 8.35% on the rise in Bitcoin and crypto related stocks. Broadcom's up, like we've just had a little chat about. TSM is also up due to semiconductors. And Tesla is trading even higher. So as you can see, all the top gainers in the portfolio are actually all the growth stocks. And I think this will go, what we're going to see a lot of now is more growth stuff in here, because income stuff doesn't generally go up in share price as much. But it'll be interesting to see how, for example, Broadcom versus Broadcom ETP does long term. Let's have a quick look, see what's on the dividends list. So we got Main Street Capital payment on the 15th, ex-date for Smith on the 16th, earnings for TSM on the 16th, earnings for Netflix on the 21st of October, earnings for Tesla on the 22nd, ex-dividend date for Misty on the 23rd. So we've got quite a lot going off over the next couple of weeks. So right now the payments are up to $1,700 to $1,800. Total paid so far is $1,300 for October. So we've still got some payments left to come. So I'm getting closer to my target at £2,000, which is amazing. And then once I hit that £2,000, we're going to keep pumping into the growth. That's going to be the plan. And it's going to create this really good portfolio long term. I'm really looking forward to all these portfolios. I'm really happy with everything that's happened. So jump into some analytics right now. So jump down to the returns, we'll see the capital loss. So the capital loss is down again, 19% this time, which is great. And the total profit for the products that I've got inside the portfolio without any sales is minus 3.82%. But for sure, that is going to go up now. We are seeing major improvements within this portfolio. Really happy long term. See how we're doing against the S&P then. Because what I've noticed is over the last couple of weeks and months, my portfolio has been beating on the short term. If I look at 7 day, it's up. The 1 month is actually behind now. But if you look on the 3 month, it's up. The 6 month, it's up. And year to date, it should still be down. So I think long term, this portfolio is probably going to be beating the S&P. It's just a matter of time. But right now, year to date, as we always do, portfolio is behind the S&P, minus 13.97% since the beginning of the year. So that's my target, get this portfolio beating the S&P long term, and I think we can surely do that. Let's jump to the holdings performance then. Archer is up 40% year to date, Broadcom 24%, Gold ETP 24%, TSM 18%, Coin 13%, Silver 13%, LLY 12%, Snow 10%, United Health 8%, Hims & Hers Health 7.1%, Broadcom ETP 6.9%, Palantir 6%, JGGI 5.9%, FEPG 5.7%, Bitmine 3.7%, Meta 3.5%, Tesla 3.1%, YMAP 3%, Nvidia 2.4%, Main Street Capital 2.4%, Google 2.2%, MACD 1.9%, Smith 1.7%, Netflix 1.6%, Microsoft 1.3%, Shopify 1.2%, MasterCard 0.82%. So next up we have the losers, and there's a lot more winners than there are losers as of late, which is great to see. Amazon minus 0.74%, JEPI minus 0.96%, Uber minus 2%, JEPQ minus 2%, Palantir ETP minus 2.1%, Spotify minus 2.1%, JEPG minus 2.5%, Coinbase ETP minus 4.3%, MSTR minus 4.9%, PMLP minus 5.5%, Tesla ETP minus 11%, and Misty minus 26%. So all looking well with the portfolio so far. Let's jump into the report then, because I really like to look at this. This is basically your total profit for the month, seeing it on a month-to-month basis, because on Snowball you can only see your total profit as a whole right here, but they've added a new report on here which shows you your total profit month on month, which is great to see. As you can see, July was 6.6k, then we went down minus 3.5k in August, September 3.3k, and October 568 so far. So it's going to be great to see how the total profit fares month on month and see, are we making profit, are we not making profit? Because that's the main key, is the total return and the total profit. And if you're not doing that, then there's no really point in carrying on. Yeah, thank you guys. Leave comments below. I would really appreciate if you drop a comment below, let me know what you think of the portfolio, and also let me know how your portfolio is going. It would be great to speak about each of us portfolios. And also, if you haven't watched my latest video, which is the top 20 high yield ETFs for October, it'll be on your screens right now. Thank you guys. See you in the next one.